Hi there, Internet. My name is ʀᴇᴠɪᴇᴡ, and I am one of eToro's most copied popular investors. Today is Friday. It's been one hell of a week, and so it is time for my weekly update. Before we get into it, I wanted to talk about a few changes that have happened over the past week because eToro's platform has been so successful. A huge volume of new people have joined the platform, and so they had a bit of a service disruption during the week, which I think was quite frustrating. They have shared this document with me, which I have shared with my copiers, but also they are looking to temporarily increase certain minimum thresholds so that the number of people copying others is hopefully will be reduced temporarily while they make the platform a bit more resilient. Just so you know, the minimum copy size for everyone is now $500. I have adjusted my portfolio through yesterday so that the minimum for my portfolio is also $500, so it coincides with that number. And they are raising the minimum trade size from $1 to $2, and part of what I did yesterday will mean that if you copy with minimum amount, you'll be covered for this minimum trade size. So that's effectively it. If you copy me with a minimum amount, you don't need to worry about anything else. For those people that aren't copying me with $500, if you increase the amount that you copy me with to $500 and don't copy open trades, I expect we're going to see a lot of trading through the next few weeks and months, so your profile will be brought in sync with mine eventually, and you won't miss out on any of my trades. In addition to that, there have been some copy sync issues, and I've just spoken to eToro, and they have said that they're working in the background to make sure that my copiers are in sync with my portfolio. Some of you will have noticed that that has already happened, and they will continue to do that through the coming week or so. And as far as possible, they will honor the prices that I bought or sold positions at. Okay, so now that that's out of the way, let's take a look at the week in review. So obviously it has been a bit of a rough week, and if we look at the 1 week change, we can see that, for example, the Nasdaq has seen a pretty massive sell-off on the 1 week timescale. Other indexes haven't fared so badly, and this is because the rotation that I've been banging on for months and months about has arrived. I'm not sure if it's done yet. It could continue. Tech stocks are still looking quite expensive, so we will have to wait and see. Quite a nice way to visualize the rotation is on FinViz. So here we have across the different industry types. If I jump to the 1 day performance, yesterday was a strange day because there was a sell-off across the board. I expect there was just some profit taking, but also it is now the end of the month and the week. And so just about everything was red yesterday, as you probably will have noticed. But if we go back 1 week, we will see that it's definitely certain industries that have been hit hardest. And the usual suspects, finance, energy, industrials, materials, and real estate have seen probably some inflows, whereas the other industries that have been hot for so long have seen outflows. So this is quite an interesting way just to look at the overall market. Just to provide a bit of perspective though, so even if we look at the Nasdaq, that has sold off over 5% in the past week. If we go back to the beginning of the month, we've lost maybe 1 month's worth of value on that index, which isn't a huge amount, and this is very healthy, by the way. This is not the end of the world. It really isn't. Okay, so in terms of my stats, which I had up a moment ago, these haven't updated for the day yet. I haven't made 10% for the month. But I'm in profit for the month. So despite the sell-off over the past week or two, this number is probably around 7.75%. So we've seen a pretty large scale rotation and quite a lot of fear. but we're still finishing February in a good deal of profit. Now, I'm not sure where the day is going to go. Futures are signaling a day. If we look at the day view, they're signaling a slightly green day, but you know, a meekly green day. I would call it meek, and that's there's some fear in the market still, and it could easily reverse through the day. So the important thing to note is the market sold off. We were prepared. We finished February with a huge amount of profit. We've still got some money in our pocket, which is great. And through yesterday, for those of you that have followed, so if you look at the close time on the 25th, I did a lot of trading yesterday. So you don't even have all of my trades here. So some of the trades will have been in red. You know, I'm only human, I make mistakes. But some of them were hedges, so they're insurance, and sometimes you have to pay for insurance. But there's a lot of green in the closed positions from yesterday too. And if the market does suddenly bounce today, we've bought some stuff on the cheap, which is great. So I don't know if you're interested in the detail, but you can see some of our hedges. The VIX positions were engaged. We made some profit there. I could have held for longer, but it started becoming quite risky. And so that's it in terms of a trade update. So month to date is probably 7.75%. Year to date is about 9%. 6-month return is still 35%. And lifetime return is just under 650% return. So don't worry too much about volatility on the short term. It's the long term that we're really interested in. The US dollar has also strengthened, and this is quite normal. The dollar is a safe haven, so when things look to be going a little crazy, you'll see money flood back into the dollar. And this consequently affects a whole bunch of things that are priced in dollars, including commodities. Strangely, we didn't see a rise in gold yesterday, and some of the fears that were driving prices lower yesterday, which included obviously a rise in bond yields. I'm sure you've read all about it on eToro already and the internet, but which is probably driven by fears about inflation. And fears about inflation usually drive the price of gold up. So I'm a little bit confused as to why the price hasn't risen. But this is a play. I might not buy gold over the next few months, but I think I might buy companies involved in gold because inflation will eventually go up. I think the fears right now about it through this week have been a little bit overblown, very overblown. The UK 100 index, unfortunately, is a bit of a copycat. And so you will have seen it opened red because it's been following the US markets. It's recovered a little bit now because the US markets have too. But this is going to be a focal area of my investment through the next 6 months, maybe 12 months. A number of UK companies have been reporting earnings through the past weeks, but in particular today. And a lot of the earnings are looking pretty good. And the forecasts are also, they give me a lot of faith in how well the UK economy is going to be through the next year or so. All right, today I think it's going to be a tough day to call. I kind of mentioned that. We're going to have two forces at play, as we usually do, the bulls and the bears. Tech stocks have fallen over a protracted period, and so much that I think greed and a bit of fear of missing out might drive people into tech stocks because they see the prices being cheaper, even if the stocks themselves aren't particularly cheap. They are much cheaper than they were a week ago. And so people don't want to lose out on potential gains. And on the flip side of the coin, there will have been a lot of people that have lost money through the past week or two betting on tech stocks. And so at the slightest show of weakness in the NASDAQ, they might look to sell out further. So I won't be able to call the day. We're just going to have to see how it goes. Long term, it won't matter though. It won't even matter in the next few months, I think. Because I do think the selling has been overdone for now. All right. Next week brings in a new month, and this in the head of institutional investors kind of resets the goalposts a little bit. I think that the fears about yields and inflation will now kind of, they'll fade slowly into the background, and investors and the media will find other headlines to focus on. I expect vaccines and the world opening up to be a focal point for those headlines and the key messages driving the market. It might not happen immediately next week, but I think it's a theme that we will see more and more emphasized. We will see some earnings through next week, but it's mostly in the UK and Chinese stocks, not so much on the US side of things anymore. And vaccines are progressing well. The world is looking to open up, as is evident in the types of stocks that have been doing very well through the past week or two. So if we look at performance, and let's grab 1 week performance, we can see UK flags here. These are all the UK stocks doing quite well, and the VIX doing quite well. And so UK stocks, UK opening up stocks in particular, US financial institutions, they've all made quite a lot of money through the past month, and this is a trend that I expect to continue and to compound through the coming quarter. All right, so that's it for today's update. If you have any questions, please let me know. It sucks that the past week has been a bit rough, but actually it's these rough periods that allow us to position ourselves better for the future. And despite losing a few percent through the past week or two, I think this will mean that we will gain a lot more in the near future. All right, have a great weekend. Have a rest. The markets are a little crazy now, so we need all the energy we can muster. Thanks. Bye.